Thank you everybody for joining today's panel conversation where we're going to be talking about the payment behaviours and preferences of New Zealand consumers and merchants. We're going to be taking a forward-looking perspective on this topic to understand how the market will be changing over the coming years. Joining me for today's conversation are three industry experts. So first of all, we have Will Miao, who is Head of Online Payments at Paymark. We have Steve Wiggins, who is Chief Executive of Payment New Zealand. And we have Rebecca Fairbrother, who is President and Founder of Magnet. So thank you very much, Will, Steve and Rebecca for joining us today. Now, I might start the panel conversation just by giving Will and Steve and Rebecca just the opportunity very briefly to explain a little more about who they are and what they do. So Will, if it's okay, if we start with you.
Absolutely. Thank you, Alex, for having us. So I'm Will Miao, and we work at an organization called Paymark. For those of you who aren't familiar with us, we started the FPOS, so domestic debit network here in New Zealand about 30 years ago. That network is going strong and is still one of the most ubiquitous networks of its kind in the world. So my role in particular is really looking at, after 30 years, what can we do to actually upgrade our business from actually just running a 30-year-old piece of switching technology to embracing the new open banking era and getting into the API side of things, and as my title suggests, online payments. So I'm excited to be with you.
Perfect, thank you, Will. And Steve, over to you.
Yeah, Steve from Payments NZ. We're the self-governing body for the payments industry, and we manage the rules and standards how payments go through the system. So we pump through around $7 trillion a year through our high value clearing system and our retail clearing system. And of course, looking forward, looking at changing payment behaviours and innovation is really important to us.
Sure, and thank you, Steve. And Rebecca?
So I have a regulatory background. I spent a number of years at the Reserve Bank of Australia, although I did grow up in New Zealand and have since moved back. I am president and founder of Magnet, which is the Merchant Advocacy and Guidance Network. So as the name suggests, I represent and advocate for merchants, because when I moved back here, I realized how there is essentially no regulation, and the merchants are paying much higher fees to accept card payments than they do in Australia. And so I saw a need there for merchants to be represented, because industry is represented with Payments New Zealand, and consumers are often covered by a lot of consumer protection. There's a lot of government support for that. But merchants, yeah, so they're a big part of the payment system, but essentially there wasn't a voice for them to be heard in terms of what they needed. So I saw an opportunity there, and that's why I've created Magnet. So yeah.
Perfect. Well, thank you, Will, Steve and Rebecca. So my first question relates to the pandemic's impacts on payments behaviour. Now, across the markets that RFI operates in, we've seen the pandemic have sizable impacts on the way in which consumers want to pay and the way in which merchants want to accept payments. So my first question really is to understand a little more about how we've seen that translate into the New Zealand market. So Will, perhaps I might start with you for any comment there.
Absolutely. So non-surprisingly, at a very high level, we've seen a big jump in e-commerce transactions, but also for in-store, we've seen a lot more contactless adoption. And people do joke, right? Contactless had been around for 10 years, but COVID's really the push that the industry's been waiting for to get people on board, largely. So on the online side, New Zealand Post actually put out a figure, 25% growth, that is based on 2020. So that largely is attributable to the COVID lockdowns that we're seeing here in New Zealand. And but interestingly, after the lockdowns lifted, because of we had a relatively short lockdown here in New Zealand, we still saw some of the figures sticking. So it wasn't at the end of the year as high as it was during lockdown, but certainly was much higher than it was back in compared to 2019 baseline. And as for contactless, our proxy to that is what we call scheme debit. So that's basically debit transactions initiated on a Visa MasterCard using contactless technology. That has jumped by over 10% during the lockdowns, and that has largely stuck as well. So now we have seen that rate being all transactions in store being about half of that is either contactless debit or credit, which could also be contactless as well. And domestic debit, which is either a Stripe, Max Stripe or an insert, has declined. But I think another thing I wanted to point out is even though we didn't have a lot of in-store transactions during the lockdowns, when the lockdowns lifted, it bounced right back. Even without overseas tourists coming into New Zealand, we have seen some of the highest figures, and we had another record Christmas last year. So that's a really good sign and of Kiwis getting out, supporting local economy, getting back in schools.
And Steve, it sounded like you were concurring with a lot of what Will said there, but any comments to add?
The obvious one is around the contactless increase as well, but also what shot up was the amount of contactless enabled terminals in the market. So just pre-lockdown, there was about 36% of them. By the end of the year, it was made up 52% of the fleet. So that's really interesting. And also just concurring with Will on the contactless percentage overall transactions, it shot up to just under 40%. Year before that, it was 27%. So I think the contactless one is really important, and it's obviously one of those trends that are going to continue. The other fun fact for me during lockdown was 328,000 New Zealanders signed up for internet banking for the first time. And I think that number is quite extraordinary when you think about that. So that's another big shift in terms of the changing behaviour of New Zealanders and how they make payments. So 328,000 citizens now are doing internet banking, which they weren't before lockdown. Quite extraordinary. But then if you look at the other trends that are happening, I think overall the payment system held up really well during that time. But we look at other changes that are starting to occur, maybe not in this market, but in others. The things like virtual reality shopping, wearables are now coming back into to play, and starting to see an uptick in those things as well as what we're observing at this end.
Okay, perfect. And Rebecca, any comment from a merchant standpoint? How has the pandemic changed their preferences from an acceptance?
Well, in terms of my interest I have is in the regulatory changes. So, sorry, not the regulatory changes, the changes in interchange fees by Visa and MasterCard is one interesting thing. So in August, both schemes changed their fee structure so that the interchange fee for contactless debit dropped to 20 basis points, and quite a significant drop. And I thought that came at the end of when a lot of the banks were removing their free debit contactless rates that they had since COVID came out, when ANZ initiated that. And I wonder if in part that's why the merchants have continued to accept contactless rather than reverting back to the ones that weren't actually accepting it, or if it's a bit more of inertia. So as I said earlier, I have a regulatory background, so I think it's probably a bit of both. And from my members' perspective, there still is some resistance for accepting contactless, especially if a business has high value transactions on average, because they obviously that if COVID was the issue as to why they were thinking about getting contactless, the reason they did it was that most of their transactions were above $200, and so therefore their customers would have to put their PIN in anyway. In terms of going forward with mobile payments becoming more and more used, I know that both in the RBNZ and RBA have reported with their consumer studies that there's been an increase in the use of mobile payments. Then I think the customer is driving the acceptance of contactless. I also know that Afterpay has just recently announced that it's moving from its QR code system to offering a virtual card, which is a prepaid card. And so any merchant that wants to accept Afterpay has to accept contactless. So one of my members has opted to not continue because of the cost of the contactless for her business. So that's my take on it. I mean, I do live in a small town, and I've been building out my membership in locally initially, and so that could be skewed. I know when I've been to Wellington, there's a lot more contactless available, and yet I've heard, I haven't spent a lot of time in Auckland, but I've heard that it's not as prevalent in Auckland as it is in Wellington, which is also an interesting observation.
So it sounded like there was a collective belief there that some of the change in behaviour that's been seen will stick, and perhaps some of it will revert back, at least partially, to the pre-pandemic state. Is that a fair?
Yeah, like I think so. Although I have looked at the statistics that Steve provided in as part of the merchant regulatory consultation, the submission by Payments NZ, and that as both Will and Steve said, there's been a big switch in contactless versus contact for both credit and debit, and that's been sustained in terms of the numbers since the pandemic. But I think there's going to be some flux back and forth, and I think that's the key. One of the key purposes of Magnet is that, because it's very confusing to understand whether it's cheaper or whether it's worthwhile accepting contactless, because there are so many factors, that having a voice for merchants so that those issues can be conveyed to industry, because I think that industry needs to know what merchants want so that then they can be able to provide a better service, and vice versa, so we can both sides can win. Because I think that we're both sides are a little bit in the dark about the preferences for accepting contactless.
Perfect, thank you. We touched on examples of innovation. So I think Steve touched on mobile payments and QR codes and virtual reality payments, etc., wearables and the like. There's obviously examples of innovations that are emerging in the New Zealand market and have emerged, but what's your sort of collective assessment of the state of innovation and perhaps gaps versus other markets? So Steve, you touched on innovation, so perhaps I'll start with you. Any comments to add there?
Yeah, I think the New Zealand market has always tended to be innovative in terms of its approach to payments. One area that we have fallen behind and the industry is sort of looking at now is the real-time platform in terms of that. So we've still got significant amount of funds that are going through either same day or in real time, but we haven't got that real-time capability 24/7. And so looking across other jurisdictions, obviously they have, and a lot of that is because they have sort of leapfrogged into that, whereas our current system is still functioning pretty well. I think everyone agrees with that. So that's what one of the focuses of the industry is, hey, when and how should we deliver this real-time capability?
Yeah, and Will, any
yeah, so I might be a little spicy here. My view is I think New Zealand's been leading for a long time, but up until recently we've started to lag in certain areas. So Steve touched on a few. Part of it is because we have led so well in the past, and we have one of the most ubiquitous domestic debit network, EFTPOS, and we have one of the highest banked populations in the OECD world. So 99% of all eligible Kiwis have a bank account, and that's among some of the highest in the OECD world, but also compare with other countries in the 60s, even less than 50%. That's staggering, right? So for those countries, they've actually gotten an opportunity to then kind of go, well, given that we have a blank slate, how do we actually frog the likes of New Zealand and our infrastructure and actually take a step forward? And with mobile wallet and peer-to-peer payment using alternative rails, and certainly with open banking and some other jurisdictions as well. So that has, in a way, I guess, allowed them to become leaders in certain areas. So here in New Zealand, we see that since EFTPOS, most of the innovations we've been seeing are mostly scheme dominated, so Visa, MasterCard driven technologies like contactless. Whereas really for us to take control back, given that we have such a good banking infrastructure and payments infrastructure, thanks to Steve, we really see the next opportunity being open banking, and we'll certainly talk about that a little more next. So Paymark's been working on open banking technologies, with our online EFTPOS being the first open banking product we launched in the New Zealand market, which is getting a lot of traction. So that's where we see the opportunities at.
Thank you. And Rebecca, you mentioned that you recently, as I understood, come back from Australia and returned to New Zealand. Perhaps that gives you the opportunity to assess the state of innovation in both markets and differences and similarities?
Indeed. And so I was working in the policy department with regards to the NPP, which is short for New Payments Platform, which interestingly they're continuing to use that name, which is funny given it launched a few years ago now. But yeah, and so that was, as soon as I saw that question, the fast payments system is immediately leapt to mind. And so I concur with Steve and I concur with Will. And I think one of the key things that we need is the open banking and the fast payments to happen in sync, because you can't have, you have settlement risk essentially with open banking if you've got instant payments at the point of sale, for instance, and you don't have the backing, the infrastructure in the background to actually facilitate those payments going through. So, those obligations could accrue. And whereas for instance, with the Australian real-time system, MPP, it's real-time clearing and settlement. So you instantly get those funds into your bank account because your bank has instantly received those funds from the payer's bank, which is quite an interesting model. Compared with other places around the world, will do the immediate clearing, but not the immediate settlement. So I think we need that here. And given that SBI, which is the current retail settlement process, I think that there's definitely the capability for Payments New Zealand to do a good job of 24/7 real-time retail payments. What I will say is that the process for getting the NPP in place started back in 2010, where the Reserve Bank conducted a strategic review of innovation, which came back with its conclusions in the middle of 2012. And essentially, one of the outcomes of that was that the industry should build a real-time payments infrastructure, but that the Reserve Bank left that to the banks, etc., to come up with how to build it and to build it, while the Reserve Bank came up with the settlement behind the scenes. Yet it took a long time for that to actually properly get started because of lots of coordination problem between banks, which is a classic issue in payments because it's a network game. And so the Reserve Bank had to continually use moral suasion to get the banks to work together. And then that took longer than expected. And so the new payments platform didn't really start going until 2018. Now that's, 6 years since they were told they should. So that's with regulatory push. So if we don't have that here, I can't see it being built sooner than that. That's my regulatory background, Steve. I hope that we can do it sooner than that, but I'm sure you're aware of trying to coordinate different commercial entities to build something that's beneficial to everybody. But the first mover problem causes issues.
Yeah, that's our world, right? In terms of getting the network to all come along in the same direction and at the same pace as well. So we recently put out our payments modernisation plan, which was widely consulted across the industry. And it's fair to say that the feedback has been, hey, it's got all the right elements, but it's too long. You need to do this quicker. And so that signal certainly hit the industry loud and clear in terms of that. And all I can say is there is a lot of industry activity that is working on how are we going to do this? And I think from my observation, there's real commitment there. So I think that's one thing. Let's see how that plays out over the next probably 3 to 4, 6 months in terms of where we get to with those initial conversations. Second one too, I think this needs to be seen in the broader context of some of the regulatory burden that has been placed on some of those institutions. It is huge, both in terms of either COVID related or capital related, or the BS11 legislation, those sort of things. There's a lot of activity going on within those organisations. Therefore, that comes to another broader industry issue, is capacity and capability. You know, have we got enough people and capability to actually do the work? And that's one thing that at times, I think for me, you know, the payments experts, they tend to be getting on, and some of that capability is starting to get pretty thin. And I think that's fair across all of the payment organisations. But we're certainly aware of that, but we also need to give that some consideration in terms of how do we continue that innovation at the right pace and do it safely.
Thank you. We might sort of continue on the focus on regulation and talk now about these the interchange reforms, the recently announced interchange reforms, and perhaps a punchy question to start with. And Steve, I know we spoke about this briefly before the session, but what's your sense? Do consumers win from the reforms?
Well, if we look at the reform, if you just focus on the interchange, so that's the first one, Campbell, Thurek, right? But the reform, Rebecca, correct me if I'm wrong here, is sort of a designation approach to broader retail payments providers. So they're just starting there with interchange. Will consumers win? If you look at other jurisdictions when they've introduced the regulations, I haven't got much evidence to show that actually gets passed through to the consumer, but it certainly is a benefit to the merchant. There's certainly no evidence to say that it passes through to better wages for staff, those sorts of things. So does a consumer win? Not sure.
And Will, a perspective on that?
Very similar perspective. It is just the first of the many changes to come in this very complex web, right? So it's only interchange. Interchange is only one part of all the payments that are happening today. So FPOS, I mean, we mentioned it's still going to continue to be free, but open banking is not part of this regulation, and we've asked for clarification on it, and the answer is it's going to be captured in other legislation work that MBE is currently working on. So then, without getting the full picture, it's actually quite hard to see what the end results will be. Immediately, we probably will see some short-term benefits for the merchant. Whether that will stick or not, whether it's a whack-a-mole and the costs come up somewhere else, we don't know till we see the full picture.
And that's a good segue to you, Rebecca, from a merchant's perspective. What's Will gave a prediction from a merchant standpoint there, but your thoughts?
Well, given that there's regulation in Australia for interchange fees and merchants, when I was there, I don't recall after I don't really recall anywhere not taking not taking contactless, and so the regulation is important to help merchants be able to offer these services. However, one major concern I have with these merchant fee regulations is the speed at which the government has implemented it or done the consultation over. So, for instance, in the Reserve Bank, there was a major financial system review of not just the payment system. And out of that came a number of changes, which included instigating a regulator, so the Payment System Board, part of the RBA. And then there was the first regulation that was actually put in place to say, there's a cap on interchange fees, didn't happen until around 2002, 2003. And at that point, that's when Visa and MasterCard, about a month after those regulations became live, took the RBA to court. So they ultimately lost, but it's a long, drawn out, expensive process, and that's just wasted resources. And just coming back to New Zealand, the announcement of the caps is talking about the interim or transitional period, which is 6 months after the retail payments bill is what it's being proposed at the moment, which would, as you were correct, Steve, is where the MB is looking to have a designation approach, which is the same in Australia. So 6 months after that legislation is finalised, that's when that transitional period comes in, while the Commerce Commission is building up its, putting together the regulator, whatever form that might take, and figuring out how they're going to regulate. So, and MB doesn't see that happening for at least a couple of 18 months to 2 years. So there's going to be, I'd say, depending on when that legislation is finalised, which I hope that the government takes sufficient time to get that right. I think MB has, in between a rock and a hard place, that they've been tasked with creating these regulations and this setting out what this legislation should look like in a very short time frame. And so there's going to be, I would say, at least a year's worth of time where we have those hard caps. And like I mentioned in Australia, the legal action that I suspect there could be legal action, which isn't great, as you might imagine. And then there are a few other things a few other unintended consequences that could arise from having very simple hard caps. I mean, the Reserve Bank of Australia they've just finished their third major review of the credit card regulations. And each time they've continued to make changes or observed things that have popped up that have essentially the schemes in the banks have done to get around having to reduce their interchange fee revenue. So again, I'm a little bit cynical, and so I can't see why they wouldn't try and do that here. So that's my major concern, is that this regulation, if it's not done right, could have very bad outcomes for merchants and consumers.
And just to pick up your point, Rebecca, around the timing, right? It does seems like this one there hasn't been a lot of time to actually come up with this first tranche of designations, right? And whether there will be more time spent in the future to kind of join everything up, we don't know, because this, to your point, it's really just a cap, and it seeks to align to what Australia has done. But New Zealand is very similar to Australia, sure, but different in many ways. For example, the FPOS has been free for merchants here, as opposed to charged in Australia. So, there are things we can do differently here, maybe better ways that if we actually don't just look at interchange at its own little designated silo, but actually the whole payments ecosystem. Could there be things like least cost routing of contactless through or debit transactions down FPOS because it's free, that kind of stuff. That's what we were hoping to see sort of in future drafts of this legislation as well.
Yeah, just another point I'd like to make on the interchange fee caps, that the government has indicated that they want to cap contact debit transactions at 0, which is what they are right now. But by putting a formal cap on there, that just cements the problem that we have, where because FPOS doesn't cost anything here, then there's been no investment in FPOS. So by the government saying it can't even, that it can't be changed, it's going to reduce the amount of innovation in that space. And least cost routing is a great idea. And it's definitely something the Reserve Bank of Australia is pushing for, continuing to use moral suasion at this point to get the banks over there to continue to roll that out. But you can't have that unless both networks have access to contactless technology. FPOS in Australia, because it's it can generate fees, then it has been able to invest in that technology and is also investing in online acceptance as well, which is just impossible here. I know that Paymark is rolling out its online, but it's not across the board yet. It's a slower process. So yeah, I do have a lot of concerns with the regulation, and I just hope that this legislation process is going to be done properly. I know I've spoken with a number of people at MB, and I know they are working really hard and they're very aware of all the issues that I've brought up. So I just hope that the government doesn't pressure them to do this quickly rather than properly.
Okay. And I think collectively you've all mentioned in passing in the conversation thus far the topic of open banking. So I might move in that direction now. Obviously being rolled out in markets around the world on paper will have some quite profound impacts on the way in which consumers and businesses engage with financial institutions. But I might give you the opportunity to provide your perspective on how it's likely to play out in the New Zealand market and the impacts it will have there. So perhaps, Will, I might start with you, if that's okay.
Perfect. Thank you. So I think open banking, just a myth buster of what the term means, right? It basically means trusted and secure access through to your bank account by a trusted third party that you've consented to and to provide services on your behalf. So there are actually examples of open banking in today's New Zealand economy already, right? So for example, maybe not in a censored way, you may have booked a flight with Air New Zealand and paid straight out of your bank account. That's not technically open banking because you're giving people your password, but the act of trusting someone to act on your behalf through access to your bank account is essentially open banking. That being done properly with actually secure API links sitting underneath that could then actually unleash a whole lot of use cases. And from payments, basically paying online without going through Visa, MasterCard schemes, or paying in store without, again, even touching a terminal, because you can use digital ways of identifying yourself like biometric, QR code, or a whole lot of other ways. But it's also more than just payments. We see open banking as a form of actually opening up not just payments, but information, identity, and exchanges of everything, because banks are actually really good at holding a really good, a holistic profile of you, right? Not just your money, but your financial position. So your bank information like your transaction histories, your credit worthiness, but also your identities of how old you are. So by allowing that access to be accessed by someone else and that data to be exported in use cases, then you're really enabling a lot more use cases. What we can see, you could basically go, well, hey, bank knows how old I am. When I'm buying alcohol, when I'm paying for that in the supermarket, I don't need to get a supervisor to come and look at my ID by making that payment from my bank account. Bank knows how old I am. That could be sidestepped. So that's just an example of how the power of open banking can really be harnessed.
And Steve, a perspective on open banking?
Yeah, it's really in an interesting space in New Zealand. I mean, with the help of the likes of Will and Paymark, I mean, we opened the API Centre back in 2019, which looked to standardise the APIs for both payment initiation and access to data or information. So we've been really good at building the standards, and we're up to version 2.1. What we haven't been so good at is the partnering between the API providers and the banks and the third parties as the users. So that is the focus on where we're at now in terms of how do we improve that partnering? Do we need accreditation regime to do that? How do we deal with liability, risk, and consent, those sorts of things that then doesn't make it hard for the API providers and the third parties to work together. We also have MBIE's consumer data right, which is there being developed, which obviously going to start with banking, probably move to electricity and then beyond. So there's this beautiful saying of, it all started with open banking, it moved quickly to open finance, to open data. Now everyone talks open life in terms of when you put health and education data in with that. So yes, there are payments elements in there, but there are also significant data elements in there. So how do we use this to drive and build what the government's been looking at is that whole digital economy. So what we're really concentrating on is the work that we do within the API Centre with the providers and the third parties, making sure that the consumer data right doesn't override that and they fit together really nicely. Also, the digital ID trust framework, which is about to sort of roll out. How does that work with those two as well? Because open banking without digital ID is a bit clunky. So therefore, are there common areas there, such as accreditation, that could work across all three? So fortunately, New Zealand's small enough. We can talk to each other. We're probably related, and we actually can work in terms of how they do actually fit together. So that's certainly my desire, is to see a really good collaborative approach to this, and the electricity sector is starting the conversation as well already. So we are down the track. We just need to see more solutions in market because there are so many cool use cases. I really like some of the ones that will help in terms of financial budgeting. And so there are good solutions overseas that say, because I've seen your data, hey, your power bill's due on Thursday. I see you don't get paid until next week. We'll pay that for you, and then you repay that over the next 3 paydays. that's a really good example of really making a difference in terms of how people deal with their money and how they run their lives. So yeah, I get excited about certainly the open banking opportunities, open data, and what solutions will occur both across the market. So we are getting there, and we are looking to how do we speed this up.
And Rebecca, a perspective on open banking and its likely market impact?
Well, the way I see open banking is it's a package of processes and frameworks. And so what the API Centre is doing with at Payments New Zealand, my understanding is it's largely about the technical stuff. Correct me if I'm wrong, Steve, where you're coming up with the APIs in which the data recipients and then the data holders, banks, i.e. banks and fintechs essentially, will operate together. Now, open banking, given my experience in Australia, how it works there is there's the ACCC, which is the equivalent of the Commerce Commission. They have responsibility for essentially the framework around that. So Steve, you identified issues with liability and risk and accreditation. And so those are things that are necessary as that framework, but not the technical stuff. And so what I think would be an efficient way of doing it is that the CDR comes up with that side of things to make sure that the participants work within these clear frameworks and to set objectives for how the standards and the APIs should be created, but let industry come up with those standards because industry knows how to do that best.
Yeah.
I know that with the API Centre, it's a series of bilateral arrangements, and I think there's that, and then there's also the fact that because there are no stipulated requirements by a regulator, that there are limitations in terms of data recipients being able to get the data that they need, and then also having to forge relationships with each and every one of the data holders, i.e. each of the banks. And I think in the UK, for instance, my understanding is that it's an open API that's available on the open banking website, and that a fintech, for instance, doesn't have to have a relationship with any of the banks involved. They can just plug in with an open API. I'm sure it's more complicated than that, but
yeah, no, there's quite a arduous accreditation regime to go through to enable that to happen. And there's also a lot of aggregators out there that provide that layer between the fintechs and the banks. So even the likes of Xero goes through that layer as well. So the industry is working this year around those. What would accreditation look like? What would that liability framework look like? And hoping to shape what comes out with the CDR as well, so that they fit together really nicely, so we can get solutions to market. So that's a clear focus for the industry, both third parties and the providers as well.
Thank you. I think we've hit up against time there, so I think that's been really fascinating to understand a little more about what's been happening in the New Zealand market and what is likely to happen in the months and years ahead. So with that, I'd just like to thank my industry experts in the discussion today. So Will, Steve and Rebecca, thank you very much for making the time to chat to me, and I wish you all a very enjoyable rest of your day. Thank you very much.
Awesome, thank you very much.
Thanks.
a pleasure, Alex. Thanks, Will. Thanks, Steve.
Cheers.
Bye now.
Bye.
Bye.